The year 2026 has kicked off with gold prices soaring, continuing last year's historic rally. Gold surged to $4,378.55 an ounce in early January, signaling that the powerful forces behind its rise in 2025 are still at play. Last year, gold jumped over 60%, its best performance in decades, driven by global economic and political uncertainty. Investors are still flocking to gold as a safe haven, especially after a brief dip at the end of 2025 was quickly bought up. The demand remains robust, with buyers seeing any pullback as an opportunity, not a warning sign. The momentum from 2025's rally is carrying straight into 2026, with gold's appeal undiminished. Central banks, market volatility, and geopolitical tensions are all fueling this demand. Gold's record-breaking run is no fluke. It's a direct response to a world in flux. As 2026 unfolds, all eyes are on gold to see if it can keep defying expectations. Understanding what's driving this surge is key to grasping why gold and other precious metals are dominating financial headlines. A major catalyst for gold's rally is the U.S. Federal Reserve's aggressive interest rate cuts. Lower rates make borrowing cheaper but also reduce the appeal of interest-bearing assets, making gold more attractive. In 2025, repeated rate cuts signaled economic concerns, sending investors rushing to gold for safety. With rates low, the opportunity cost of holding gold disappears. Savings accounts and bonds just don't compete. The market now expects even more cuts in 2026, fueling further gold buying. Investors are acting on expectations, not just current policy, driving prices higher in anticipation of prolonged easy money. The Fed's stance has fundamentally shifted the investment landscape, making gold a smart move. This policy change was the single biggest driver behind gold's 60% surge last year. As long as the Fed stays dovish, gold's support remains strong. The low-rate environment is the bedrock of gold's ongoing bull run. Gold's rise is also powered by a weakening U.S. dollar. Since gold is priced in dollars, a weaker dollar means higher gold prices and makes gold cheaper for foreign buyers. As the dollar slid in late 2025 and into 2026, global demand for gold surged. International investors, especially in Europe and Japan, snapped up gold as their currencies strengthened. The dollar's decline is closely tied to the Fed's rate cuts, making U.S. assets less attractive. This double impact, lower rates and a weaker dollar, supercharged gold's rally. Analysts expect these trends to persist, keeping gold in high demand. The interplay between currency and metal is a key part of the story. If the dollar keeps falling, gold's appeal will only grow. For investors worldwide, gold is both a hedge and a bargain. The golden lining of a soft dollar is shining brighter than ever. In 2026, currency moves are as important as ever for precious metals. Beyond economics, global instability is driving gold demand. Ongoing conflicts in Eastern Europe and the Middle East have kept markets on edge. In times of crisis, gold is the ultimate safe haven, valued everywhere, tied to no government. Persistent geopolitical anxiety has created steady, emotion-driven demand for gold. Investors want assets that can weather any political storm, and gold fits the bill. Broader fears about trade, nationalism, and systemic risk add to gold's allure. This emotional, fear-driven buying is a powerful force in today's market. As long as uncertainty reigns, gold's safe haven status remains unchallenged. The world's instability is gold's greatest ally in 2026. Central banks aren't just watching, they're buying gold at record levels. Emerging market central banks are rapidly diversifying away from the US dollar, making gold their top choice. This shift is about reducing risk and increasing financial independence. Central banks' massive purchases absorb supply and push prices higher, providing a stable demand base. Geopolitical tensions make physical gold even more attractive for national reserves. Unlike digital assets, gold can't be frozen or sanctioned, making it a strategic asset. Central bank buying is a long-term trend, showing no signs of slowing in 2026. Their large-scale purchases send a strong signal to the market, boosting investor confidence. When the world's biggest financial players are buying, others follow. Central banks are the backbone of the current gold bull market. Their demand is a cornerstone of gold's ongoing strength. Gold isn't the only metal shining. Silver has outperformed with a 150% surge in 2025. Silver benefits from safe haven demand but also from booming industrial use. It's essential for solar panels, electric vehicles, and electronics, making it a key player in the green transition. The silver market is smaller than gold's, so investment waves have an outsized impact. Silver's dual role as a monetary and industrial metal makes its rally even more explosive. Industrial demand is real and growing, not just speculative. The electrification of everything is driving silver consumption to new heights. This unique combination of safety and utility sets silver apart. As 2026 begins, silver's price remains strong, fueled by both fear and innovation. The world needs a safe haven, and the metals that power the future. Silver's story is just getting started. Platinum joined the rally, soaring 110% in 2025. Like gold and silver, platinum benefited from safe haven flows and a favorable economic backdrop. Its rarity and smaller market mean price moves are amplified by investor demand. Platinum's industrial side is key, used in catalytic converters and, increasingly, green hydrogen production. The shift to clean energy is creating new demand for platinum beyond traditional uses. Investors see platinum as both a store of value and a bet on future technology. Its versatility and scarcity make it a compelling asset. The hydrogen economy could be platinum's next big chapter. In 2026, platinum's momentum shows investors are betting on both safety and innovation. The metal's future looks as bright as its recent past. Industrial metals like copper are also on the rise, reflecting global economic resilience. Copper's gains signal strong demand from construction and technology sectors. Silver's industrial demand is especially notable, vital for solar panels, EVs, and electronics. The green transition is driving unprecedented consumption of both metals. Silver's superior conductivity makes it indispensable for modern tech. Real physical demand is supporting prices, not just speculation. Silver bridges the gap between safe haven and industrial asset. Its price is being pulled higher by both fear and growth. In 2026, silver and copper are at the heart of the world's economic transformation. Their dual roles make them unique winners in today's market. Precious metals enter 2026 stronger than ever, driven by a perfect storm of global forces. Gold, silver, and platinum are all surging thanks to low interest rates, a weak dollar, and geopolitical turmoil. Central banks' massive buying and industrial demand for silver and platinum add powerful support. These metals offer safety, inflation protection, and exposure to future technologies. The investment case is more compelling than ever. Wealth preservation meets innovation. As long as uncertainty, low rates, and currency weakness persist, metals will shine. Silver and platinum's industrial uses make them stand out in the green economy. Gold remains the ultimate safe haven, but its sister metals are catching up fast. In 2026, precious metals are essential assets for investors worldwide. Their story is far from over. This is just the beginning of a new era for gold, silver, and platinum.